Hey everybody, happy Friday. It is July 17, 2026. Thank you, God, for giving us another day of life. Thank you, God, for returning our souls and having mercy on us today. Thank you that we're healthy, God. Thank you that we can see, hear, taste, touch, and smell. Thank you, God, that we're not in a hospital and that we have health, that we can rejoice. Help us clean our hands, clean our spirits, clean our soul to follow your will. Renew us today, renew our souls. Renew and refresh our minds, our thoughts, Jesus, so that they can be pure, clean, and holy to follow your will, Father God. In your name, amen. All right, so this week only traded once. Had a couple of days, guys, where I got sick. Not sick really, but my eye got kind of cut a little bit. I don't know what happened to it, but it's red. So I've been resting. I didn't trade today. I didn't trade yesterday. I had one trade day today or this Wednesday. But I wanted to start getting into a greater rhythm of teaching and educating. Something that I enjoy doing is educating, imparting wisdom. I do it for myself. I love to teach myself new things, so I'll figure to create a program, a more formalized program where y'all can really the goal is to create an income from trading outside of your 9 to 5 or outside of whatever you do that can maybe supplement you. I don't know what type of lifestyle you have, but the goal would be to 1 second. The goal would be to help you all learn how to trade so that you can make consistent monthly income, whether that's side income or to fully replace your income that you've got. So I want to start doing a monthly rollout, and I'll probably do a weekly rollout. Yeah, probably. Let me note that. So I'm gonna do a weekly rollout. Um, of my best and worst trades of the week. So I do daily trade reviews and then I'll do a weekly top three, probably top three best trades, top three worst trades. I wanted to give y'all a best and worst trades review of the last 3 months, top 9 best trades and top 10 worst trades that I've got. So let's get into it, guys. These are all from Trade Review. These are my top 9 best trades. 1 second. I'm gonna crop this real quick, guys. Much better. Okay, let's do it. Top 9 best trades. This is from the last 3 months. First is S dot. This was on June 3rd, up 479. My entry price was around $6. The strategy here was opening range breakout. Let's look into this. So I have this in Trader View. This is to give just more in-depth analysis, guys, of what was going on here and the reasons I took this trade and what made it so successful. So this looks like it was an obviously opening range breakout. We had our high of the pre-market created. Very good. And what was the percentage? I'm curious. When we measure from where we're at in pre-market to the high, that's a 30% figure right here. 30%. So from here to here is, if we measure it, that's 30%. Okay. So ideally, if you're taking notes here, we want to see um, a range here. If we're getting in on an opening range breakout of at least 10%, 10% and up is what makes this a healthy opening range breakout. So from 10% up is from where we're at the open to the high of the pre-market. Another thing that makes this so good is that we have clean price action. Next, We've got a subtle uptrend forming on the 5 minute, and we've also got ourselves a mini range right here. So to summarize that, what made this trade so good? We had A, clean price action. B, we had a subtle uptrend forming on the 5 minute. C, we had a mini range. D, we had 30% range to the high of the pre-market. E, and this is even better, is in the mini range, we noticed something going on. We have a lot of dojis in the mini range. So we formed this mini range. We've got a high created right here. And then look, guys, this is very important. I want us to note this because if you're trading the opening range breakout, this is the cherry on top. This right here. That candle right there. That's very good. This is a hammer candle, accumulation candle, rejection candle. All in such high volume, guys. Look at the volume. So let's note the candle. Let's note the volume. The candle is a hammer candle, and it's got immense volume, meaning that during this time there was a bunch of selling, but a bunch of buying. There was hidden buying. So with this amount of volume in this candle, we can say that there was a lot of accumulation going on from a very big buyer. And if they're buying here, that's smart money. I want to buy with them and get in with them. So the only logical next step is that they take it up. And they did. So the way we would manage this is we would buy with them. So you could buy at that break of the mini range. You could buy here. I got in early. I got in as soon as I saw that signal candle because of how much volume it is. It was a clear indication. But textbook wise, we would get in at the break of the mini range and we would put our stop at the middle of the mini range. So right here, slightly under middle. That's how you'd manage this trade. Got it? So that's S dot. ORB, hammer candle, fantastic. Um, Next is CRVO. CRVO made 580 bucks. Entry price $5.30. My strategy was the break of the high of the pre-market. Let's look into that. CRVO. This is great. So just off the rip, let me mark this up. But this is the high of the pre-market right here. Guys, we have very clean price action here. That's one of the first and most important things we want to note is clean price action. I'd be curious also, I'm sure this is a USA stock, but the rule that we've been getting into is that it has to be USA stock. So CRVO, we have a high of the pre-market. We've got clean price action. I'm curious, guys, do you think we missed any potential opportunity here? We sure did. This is a little mini range on the 5 minute before the open. We had a huge rejection right here, but we've got range from the break of here to the high of the pre-market. That's doesn't want to. What is that? That's 13%. What did we say our rule was? 10% and up range. So we've got that was 13% range to the high of the pre-market. Very good. We'll take it. We have clean price action. I got in. Look at my entry, guys. Right at the top, like a little bit over. This is a stop entry. So, okay, before we get into that, we missed a little move here, we had a mini range form, and from the top of the mini range to the high of the pre-market is 10% and up. We can take that as a mini range. If it's 10% and up, we can take the trade. So we took this trade. We missed that. So this was a missed opportunity. It's just good to note in the future. Opening range breakout is a great strategy that works really well. That's a missed opportunity right there. Fine. If we got in, we would have got in right at the top of the mini range, and then we would have put our stop at right here, right below here. And this is interesting, guys. Let's look. So this is a double bottom that was formed. This stop at the same price right here and right here. This stopped twice at the same spot. I mean, that's important. Double bottom, double rejection. We would put it right below, and we would put a gap in between because stops would want to take our money before. So we just put a little bit of space. So what we did trade here though was an entry right above the high of the pre-market, or the high of the pre-market. We got in right here, clean entry. So clean price action. This in this case we were able to plan our entry beforehand with a stop entry order. Very good. So we got filled. It gapped up all the way over here. I'm sure this was a gap because it gapped up. I took profits here, took profits there. When it gaps up, so this shit gapped up from 5.4 to 6.6. That's $1. Um, this most likely gapped up, but we got our good entry. It spiked up. Take 50% off the gap, especially if it's like a very extreme gap up, because most likely it'll come down and correct. But what that does here is it creates another range right here. So now we have a new high that is getting created, that where the bulls want to take this. And we get this, we don't really know. We have a strong rejection from here. Another entry that would have been good is right here. And I'll tell you why. So we halted up, we got rejected. This candle right here is showing that there's a lot of rejection at 5.4 and that the bulls are able to support this. You get in right here at the break there and you ride it up to the top of that range created. So this was a break of higher pre-market strategy. It worked well because we got in right at the top and it powered through. The way we would manage this though, if it didn't work out, is you would get out within the first 10-15 seconds if it doesn't work. With break of higher pre-market strategy, guys, it has to work instantly, or not you get out. Next best trade, AUUD, made $355 on an entry price of $8.80. Break of high pre-market once again. Let's look into that. This is the same strategy as before. Break of the high of the pre-market. What do we got here? So we've got pretty clean price action. We have a range formed at the open. And let's see, guys, what we talked about? What is the range from here to here? The top of the mini range, 13%. So this is good. We would take that. That's a 13% range from the mini to the high of the pre-market. Remember, we said 10% and up. We'll take it. So let's do it again. That's 11, but 12.5% fine. We'll take it. Clean price action. We did have some red flags here. Right here, guys. That's a red flag. That doesn't seem too nice. A lot of rejection, multiple candle rejections. That makes us a little bit more hesitant. Guys, I got in pretty early. I saw the amount of momentum this was carrying through, so I decided to get in right here. And I doubled up at the break. So this was a pre-break and a break. two things here. So you can get in before the break of the high of the pre-market. You can't do that. This is what I did here. And the reason I did that was because of how strong the momentum was and this price range, $8 to $15. I noticed that when it goes during this price range. And then I anteed in here more for a textbook break of the high of the pre-market, um, which is great. Um, I got out at the very top here, so I managed that pretty well. I didn't take any. It went up, opened here, went up, took profits. I allowed it to go all the way back to my entry, which was here, no, no. So the fact that it passed up our high of the pre-market means that it was destined to catapult a lot more below that. So I should have gotten out fully right here, but with the amount of momentum on the downspring, I should have gotten out right here. That's something here I'm learning is you as much as you can feel momentum going up, you can also feel momentum going down. So when we feel momentum going down off of a huge rejection, we need to get all out. We might as well. Also, let me do something right here. I'm gonna crop my screen a little bit so y'all can see this better. Hold up. Oh, there we go. I think that may be better. We'll take it right there. So yeah, you can get in preemptively on a break of the high of the pre-market. Just that comes with I think that comes with experience, but also feel the amount of momentum. You need to feel the buyers aggressively buying with momentum. Secondly, when managing the trade, guys, if we see that we have a sharp rejection off new highs, it's a good reason to get all the way out. Because as much as it can go up, it can go down. And here I made the mistake of waiting too long, should have gotten out sooner. So get out when we have the fast rejection. But yeah, this is break of the high of the pre-market. Mini range formed. Probably missed this move right here. Could have gotten in a little bit better. But to be honest, it was overextended. This thing already had to move up, what, like from here to here? 16%. So what we don't like to see is such a huge mini range. We want to see a compressed mini range. We want to see a compressed mini range. We want to see it compressed. We want to see a tight mini range, and then a large room to the high of the pre-market. That's like peak setup right there. Here, we could have gotten in there a little bit dicey since it was already overextended. I saw the amount of momentum, and guys, also notice here this close at its high. Just note this. This means that the bulls are very strong. A candle close at its high. I want to note that. Note the candle closing at its high, guys. That's very strong for the bulls. That means there wasn't rejection. That means there's no, counter force striking. So that's a even more reason to get in preemptively. Right. So that was AUUD. Next, HCWB made $335. The entry price was $2.44. The strategy here was a bull flag after breakout. Hold up, guys. I'm gonna pause this. All right, I'm back. Just went to go get some water. So what are we looking at? HCWB on May 20th, up 335. Entry price was 244. The strategy here was a bull flag after a breakout. Let's look into this. So let's look before. This is actually we love this. Clean price action. What do we see here, guys? Absolutely nothing. That's the best. We want to see nothing to the left. Absolutely nothing. Right? Absolutely nothing. That's the best. We don't want to see anything. Okay? No rejection, no 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 resistance. It broke out. It was compressing for a while and now it's just new highs, room to run. So this broke out. I guess I had missed the startup of this. Let's look at this move right here, this bull flag. This is a beautiful bull flag. These are textbook. Doji's rejection off the 9 and the 21. That's probably 9 in VWAP. Yeah, rejection off the 9 and the VWAP. Would have gotten in right here to be exact and let it ride. Look, 1, 2, 3, 4, 5 minute candles. Wow. So we missed that move. With this type of move, a micro pullback that I want to get better at getting in at is right here. Slightly pulls back to the 9 EMA and then catapults again. So there's two entries right here. Actually, one entry right here. Another one could have been right here. Entry. Pulls back, catapults through. But look, now we have... so we're stair-stepping, resistance, resistance. So then we have this bull flag form, guys. We have this bull flag that has formed. We've got resistance right here. I got in preemptively before resistance. This could have easily just been a fake out rejection, but it wasn't. And I think the reason was because of how much momentum we got carrying through. Because as easy as it was to get in right there, could have got in right here as well. And that would have been rejection. But another thing I noticed here, guys, is that we were holding this level, which is around the $2 level, psychological level. And then we also had to move up, so settle higher lows. I remember this trade. It was a jerk of momentum. I got in, it broke, took profits all along there, and got out here. I'm very happy with this exit. I saw and felt the amount of momentum after this rejection up here, and I decided to get all the way out, which is something we're talking about. Next, we've got PPCB up 277, entry price 420. This was a bull flag after a breakout again. This is, I would say, our third best strategy. First and second are the break of higher pre-market and the opening range breakout. That teeters among first place and second place. Our next best strategy, or actually our S tier strategy, is VPA swing. Our third best strategy is bull flag breakout. So this is a micro bull flag. Let's take a look at this. So, and guys, this is a textbook opening range breakout. Let's see. Textbook opening range breakout. We have a mini range formed. Let's see how big the mini range is. That's a 40% mini range because we're dealing with low numbers. Look at the range from the mini range to the high of the pre-market, guys. 82%. So the earlier ones that we discussed were like, I don't know, 13 to 15%. That's an 80% mini range. From the mini range to the high of the pre-market, guys. 80%. That is massive, guys. So there's something to note here. When we see that, we've got to be on alert. We got to be on high alert. This is a high risk reward trade that we really want to capitalize on for ORB. And that's why ORB can be so good, because when we get a setup like this with the opening range, the high of the pre-market, when the high of the pre-market from the mini range is giving us with that type of clearance, we really want to capitalize on that, guys. That's like red flag goes up. We got to be in trade mode. 80%, guys. I mean, that's just a lot of risk, high return reward. I missed it. Look, so the entry would have been right here. Entry would have been right there. Stop loss right here. Double bottom again. Again, double bottom. That's our entry, guys. I think something that may cause people to hesitate is all this red action right here. That may cause you to hesitate, right? You see all of this rejection, but that's just part of the game. We could get a short squeeze up through that. So I got in here. So I took 2 trades here. One of these, not a good trade to get in right here. Bad trade. Because that was chasing. The better trade is this second trade that I took. We had this micro pullback. So this is a micro pullback. I can make a whole topic on ORBs with range to the high of the pre-market. And I can also make a whole topic about micro pullbacks. So this was a micro pullback on the 5 minute, guys. I'm sure, like, I don't use the 1 minute, but if we look at the 1 minute, yeah, you see that was a little bull flag. So any micro pullback that we see, and it's dojis, and it's decreasing low volume on the bear side. So anytime we see that on the 5 minute, I don't use the 1 minute, but how it would show up in the 5 minute is it would go down and then it would go long upper wick, and then you got to punch it as it's getting through, guys. It happens very fast. But I got out at the end of this candle, at the close of this candle. Another thing here in managing the trade is to get out at the end of candles. Like, if something is working, guys, you need to wait for the candle to close. That's another topic. I mean, managing our trades once we're in. That's a whole nother topic. Manage the trade while you're in there. I've learned over time that when it works, don't take partials until the candle fully closes. So we got in preemptively in the middle of this because we've got so much. If this had skyrocketed even past, that would have been crazy. But this is a good example, guys, to talk about the break of the high of the pre-market strategy when it doesn't work. So what happened here was, let's say we got in right here, which could have been very good. Like, this is strategy, right? We get in. What we would have seen is that, dang, this was a little overextended before. What we'd have liked to see is a little mini range form before. Can I draw? What we'd like to see is a little mini range happen here before and then go up. Little mini range right below the high of the pre-market, and then we break through because we want compression before. This was already overextended, so it's a little bit of a red flag. Um, this right here. So we're in, right? As soon as we get rejected and we go out, you got to get out very fast. For break of the high pre-market that doesn't work, you got to get out fast because look what happened after. It went down all the way here. We want to get in right at the high. Okay, it broke, but put your stop like 50% below. So this is the high. Would have gotten right here. Stop loss like right there. I'm good with that. Sometimes it doesn't work. But if there's one lesson that you learned here today, it's be on high alert. So we learned the micro pullback, which is this thing right here. You see little tail come down to the 9 and then get rejected. That represents our micro pullback. And then you get in right at the break of the previous candle with our stop. I'll probably put our stop right here. That's how I would have managed that trade. Secondly, if you learn anything, it's for the break of the high of the pre-market, in and out quick, because this is a perfect example where the break of the high of the pre-market got rejected and it took people with it. Quick rejection would have been out before this candle had even time to form. Probably would have been out, yeah, before. So if you're doing the break of the high of the pre-market, you're in and out quick. And lastly, be on high alert for large ranges in between the mini range and the high of the pre-market for the ORB strat, which is this. This is what I'm talking about, guys. This right here. That's, look, 96%, no, 92% between where it opened and where the high of the pre-market is. That's something we really want to be involved with. So be on the lookout for that. Great. Next trade. CELZ up $273. Our entry price is $4.30. This was a bull flag strategy. Let's look into this. That's our bull flag right there. Did we miss any trades before? This thing was just stair stepping the whole way through, and then we had an opening range. So this created a high right here. That's great. We would have wanted to get in right here. This would have been a perfect entry in hindsight. Probably with our stop in the middle of that mini range that was formed. So I probably would have put my stop like right there. Great. So where did I get in here? I got in here. I can't believe this was one of my best trades. So we had a breakout pullback. I got in at the high of this and then down here and then took off profits. So we had a move up here, very low volume, textbook doji right here. I was late to the game even here. I should have got in right here with our stop at the low of the candle right there. and then I quickly took profits up. This was like not that great of a trade, to be honest. I don't know how it was one of my best, but sure. Bull flag. Why is this a bull flag? Because we had a breakout up and then we consolidating right here. And what we like to see is consolidation on low volume. So this doji candle created a low volume pullback. Very nice. I got in preemptively, and I've been starting to do this with candle inside candles on very strong um, breakouts and momentum moves up. Bull flag, I'm okay with that. Quickly exited, took everything out at break even. It got rejected. It couldn't get past. That's okay. Um, Something to note here, guys. When we see a bear candle like that, it's probably best to just get up on out. All right, next. PIII chasing strategy. $7, 172. The entry price was $7. Made 172 bucks. Um, let's look at it. Sometimes just throwing money in works. Are you sure this was chasing? Guys, this is another great example of a fantastic ORB that could have been. Let's do it. ORB right here. That's a mini range. We've got a mini range. Okay. What's the range, or what's the room to the top side from there? 45%. So that's something to note for the high of the pre-market. Be on high alert for that. Also, we don't really got like crazy rejections. That's fine. So that would have been a fantastic entry right here. Put up my stop at the middle, a little bit below the middle of the range. This would have been the entry right here. Fantastic. Where did I get in? So this thing popped up. I missed a micro pullback. So how do we get prepared to know that there may be a micro pullback? One, we've got a clean close. That's important. So this right here is a very clean candle close right here. That's a clean candle close. It's closing at it. What makes it a clean candle close? It's closing at its high. That's what we want to see. So that's nice. So let's say we have a green candle like this. There's a difference between a closing like that versus candle closing like this. One is way cleaner than the other. So this had this tiny candle close. So this is already priming us to, hey, this is a good breakout. Bulls are very strong. The micro pullback happens instantaneously. I mean, from that open, it comes down here, touches it, and then instantly reverses. So my entry would have been ideally right here or a little bit above it with our stop. We can put our stop at the low of the candle. That's fine. Um, then this closed. This had another micro pullback again. So another opportunity to enter right there. Boom. Gets in. Boom. I chased this. I threw in money. It broke out, instantly got rejected, then decided to pass through again. Um, so this was a preemptive break of the high of the pre-market because we did have room to the high of the pre-market. On this strategy, guys, throw in just a little bit of money. So when we're chasing, we have FOMO. There's going to be times you think it's very strong, but you didn't wait for the pullback. You got to just throw in your lowest amount. Put our lowest risk amount in. And what also allows this to get preemptively is because we have room to the resistance level. Something that I'm still working on is getting in right below resistance is not a good move. Just objectively, getting in right below resistance is not smart because you don't have room to work with. Even if you are wrong and you do get rejected, you're going to get rejected immediately if you're right next to resistance. You want to wait until we are closer. You want to find opportunities where you have room to the next resistance point. We want to get in where we have opportunities to the next resistance level. Getting in right at a level of resistance is only applicable for breakouts, right? But right below, you haven't gotten confirmation, right? We haven't gotten confirmation. So what are we doing? So what we like to do is place a stop loss, not a stop loss, a stop entry point. Great. That means we had some type of confirmation entry. So this is let's move on. Let's talk about this type of break of the high pre-market entry. It could have gotten in right here. It went down right here. We would have been all out of this trade. Okay. So let's say on this candle we got in, we got instantly rejected. If you see this type of rejection, you want to get all the way out right then and there, all the way. But it's important to note that, look, in some examples, they'll go down and get rejected again, and the bulls are winning. So just be ready to get back in. It's a fast reset, guys. We took our loss on the shoulder, right? Take it, move on, reset emotionally so you can be open to what the market is providing, which is exactly what happened in this case, guys. We got rejected. We got rejected bad, fine. We got to just take it on the shoulder and move on. All right, next, what do we have? We have ILLR, $150.46 profit. I entered at about $3. Bull flag breakout. Let's look into it. ILLR. So, what do we have here? Fantastic. Another, what did we talk about a few slides ago? Nothing. Beautiful. Love to see that. Love to see nothing. A little bit of nothing. What do we got going on here? So we in pre-market we created a high. Looks like we created this high, right? We created this high of the pre-market. We didn't really get a mini range forming. We just were moving up on higher highs and higher lows. Then at the open, we get rejected right here for a new high. And then we come down, we're still holding. So we get rejected. We formed this doji. Oh, this would have been a nice place to get in. I did get in here. So I got in right here. Why did I get in right here, guys? So we have a few things. We've got okay, the thing opens to get rejected, opens, get rejected, creates a new high. Fine, right? So we have a level of resistance, but look at this the pullback, guys. The pullback here, the pullback candle right here. That pullback candle, the pullback candle is low volume, guys. Very low volume. The pullback candle is low volume, and I mean low. Like look at the volume from here to here. It's around half, right? Entry was perfect. The entry was so we see it's low volume. Pullback candle is low volume, and the pullback candle is a doji. So long tail doji. So that means those two things work together to mean what? The sellers are weak and there's only profit taking. Because when lower prices are offered, no sign of selling. Great. E. What else? We get in with a stop entry right at the break of the previous candle, and I'm taking fast profits. Fast profits because we have resistance right above us. And if we do this ruler here again, not 10%, not even 10%, right? So when we have a range of less than 10% to the upside, we wanna take profits fast. In other words, I'm getting in right below resistance on a bull flag. You want to manage that very fast. It went through, could have added more right here. Could have added more. And also note the market. This was when? I'm sure this was in June. So yeah, in June, you got to know the context of the market. The market in June was so bullish. So we can take risks like this. So as you're analyzing your trades month to month, ask yourself, what type of market is this? Is this a bullish market, a bearish market? How are we feeling? Are breakouts working? It ebbs and flows. And if I had to draw like a diagram of how bullish it was, I probably could get Claude to do that for y'all to see a diagram of how bullish versus bearish the market is, right? Just day by day, month to month. But contextually, this worked because we were just on such a strong bull market. And we were getting these crazy breakouts. But this is bull flag strategy. ABC, we had a rejection, low candle pullback. Low volume doji candle pullback. We get in at the break of the previous high. We take profits fast, but we could also ante it up for that breakout. Next, NXTS, $139. Entered at 15. No strategy. So let's look at this. Why did I include this? So this is such a beautiful. Okay, we missed the opening range breakout. Fair. We've got stair stepping up. Fair. We've got a mini range form, a bull flag. Fair. What missed opportunity we had here? We had a missed opportunity right there. Could have gotten in with, I would have put my stop loss right here. I took this because I didn't get here on a breakout pullback. I didn't get it here on an opening range breakout. I didn't get here breakout pre-market. There's no strategy here. This was solely chasing. So when I'm chasing, I'm usually throwing in like we said, very little money, low risk, because we don't really have a defined stop. My stop loss here probably was right there at the low of the candle. If you're gonna go in, stop loss, low previous candle, low of entry candle. We'll do it at the low of the entry candle. And what else? Um, it's considered chasing. I mean, I did contextualize it. You know, we had a very strong close right here. We were making new highs, no resistance overhead. Also very strong candle close. So all these things make me be okay. I'll throw in some money, manage it very, very diligently. We're in and we're out on these type of things. All right, last one. Oh, that's the last one. So next episode, guys, I'm gonna talk about the top 10 worst trades. Top 10 worst ones coming up. All right, guys. Hope y'all learned something. Hope you learned something good. I am here to teach y'all. Here for y'all to learn something. And love y'all. Hope you learned something. 51-minute video. I'm open to text, open to call. I'm gonna be creating more formalized courses, more formalized ways for y'all to tap in and get involved on the trading for the day. Yeah, let's get to it. Bye.